All right, good morning. You guys hear me? Thank you. Thank you. I'll do this disclaimer per usual, and then I'll be back and we'll start.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial, and therefore investors should carefully consider their financial stability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites are digital and used for educational purposes only and should not be construed as an express or implied promise or guarantee that you will profit without any limited in any manner whatsoever. Users of the information accept full responsibility for the outcomes of their deployment to most Apple Trader, LLC, and any associated companies, agents, management, owners, and customers harmless without preservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41, hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made that any accountable is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit in hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading requires completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses derived from a particular trading program is high trading losses and material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may harm or overcompensate for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to markets in general or to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in preparation of hypothetical performance results involved, which can adversely affect actual trading results.
This trade room and this webinars are not intended to mirror my trades or to get specific trade recommendations. The analysis as I share trades and potential trades are making based on my personal analysis. The goal of this room is to teach trade identify specific areas trading conditions also ultimately decisions. Trading is extremely risky and you decide on my personal trading, so I know risk and potentially to entire company more. I'm not responsible when it comes to drawdowns in my trading accounts. The spreadsheet that I access to is my personal spreadsheet that I use in Arizona Valley UTR and now people exact prices of my trades. You can see when I add its own prices to my spreadsheet as well as price different trades whether you have a long or short. I can able to copy the spreadsheet and then others which when I take from some prices today and on some prices. The spreadsheet is not telling which section of trades it has such a price and it's not prices for long short positions depending on the trading person inside. All right, good morning. Morning in my trade room. This was originally just for my trade room, but we invited some Bookmap Discord peeps. I don't know how many will be on here, but good morning to you as well. And let me see if we got Brent in here. Do not see him. Hold on. Not seeing him. Hold on a second. Let me send him a quick email. Make sure he's.
US Defense Secretary says you've been clear if attacks against US personnel in the Middle East don't stop, we will respond.
All right, so anyway, while we're waiting for him, just gotta keep an eye out for him. Currently short ES here. This was a this is a broken ice setup. You can see here. This buy ice came in right here. This was basically a one price zone here. You can see this buy ice on the on chart here. Triggered there. Market moved away, came back, triggered it again a couple times. But this was all one price, 41.90. So this is one of the areas we trade in my trade room. These are called inflection zones. This is a zone that this market keeps failing at. So shorted it again. So you can see here, this was from back here. I'm gonna do a directional conviction move here, another move here, selling tail, another move here, just failed again. So you know, this is looking, depending on what happens at this yesterday's balance area, this still looks bullish. And then it also bounced off the Spotgamma support that we'll talk about. But you know, I take these trades. This one I actually should have waited for a retest failure, but I got in aggressively. So I'm actually long NASDAQ as well, or not as well, opposing from a setup down here. Potentially we'll go over that, but I'm long off of this setup. I trail my stop to this last stop run. So if this gets an ATR below here, I'll be out of that trade. But so right now I have opposing positions on, so that's not very fun, but that's the way it is. I follow the link that I clicked does not let me in. Hold on a second. Let me resend him the link. I don't know why that wouldn't let him in. second. All right, some of the other link, I mean, it's not the new link. I don't know why this didn't work, but it should be on momentarily. All right, so that's what I have on right now. And it's currently breaking, so I don't. So this is interesting too, right? So this is perfect to what we want to talk to them about. So the market's moving this way, HIRO is moving that way. You know, I'm going to be watching some of these areas closely to be getting onto some of these shorts just from that alone. Again, I don't claim to be an expert on using the HIRO. I use a very basic sense. That's why we're doing the webinar with them, right? So I'm going to ask questions just like you guys are, and hopefully we all learn from it. But it's definitely a powerful force in the marketplace, right? These options dealers have to hedge their futures, so they are a important entity in these markets. So you want to know when you get big notional moves in that HIRO, right? So that's another thing we're going to talk to them about. What's the what's a big move versus a small move, so on and so forth. So you can see this is starting to bounce here. I'm just going to get out of a couple of these because it's going to be hard to track my trade here while I'm on with him. I have 9 on, so I just got out of 3. All right. Anyway, this was the area, the support area that he talked about in his daily notes today, 4150. It came close there at the open and moved away. So, if this continues to move down, I'll definitely be watching this area to get out of a couple more. So let's see if he's on now. He's on. Hold on 1 second. Make him presenter. All right, Brent, you're our presenter if you want to hop on. I'm pretty sure I can. The problem is I don't know if you'll see my screen. Hold on. I'm not used to doing this with somebody else. You hear me, Brent? So you guys in my trade room, what do you see right now? Do you see my screen, or did it knock me off? Brent, I can't hear you. Hold on a second. I gotta make sure it's on my computer. All right. We got your screen, Brent. Let me, I don't know why this is good.
Hey, everybody.
Yeah, I can hear you now.
Yeah, cool. All right. I got to figure out how to change to my correct screen. Sorry, everybody, for this. We'll get it all sorted out here.
Yeah, I don't know why that link didn't work, but at least you're on now.
All right. I'm going to pause my. Oh, let me see what kind of screen I got up here. All right, there we go. We got something. Awesome. Okay, thank you everybody for being patient with me here. We got all the technology pieces sorted out.
Celsius 100.
Interesting day today, and I sorry I missed your kind of opening statements there, Scott. What I wanted to bring up first was our daily note. And in the daily note, what we laid out was, look, there's this kind of key resistance band above in the kind of 4,200 area, and there's this big support band below it, roughly 4,150. And the reason that the market, in my view, went up on Monday or Tuesday, or had kind of a bias to go up on Monday into this morning at least, was that VIX and volatility was coming down. And so on the red candlestick chart here, you see VIX from Friday, we spiked higher, right? Because people were worried about the war in the Middle East, and they've been hedging that. And if you look at charts over the last couple of days, as we've been showing in our founders notes, there's been a bid to the VIX on every Friday, right? The VIX goes up Friday into the close, and that pushes the market down because people are worried about the war situation, right? So you put on tail risk hedges, you buy puts to protect your portfolio in case some kind of really unfortunate scenario breaks out. It's already obviously a bad scenario, but it can escalate. Nobody wants to see that. So what happens then, this is called Vanna flow, right? Puts get bid, and that flow naturally increases the values of puts and implied volatility. And when implied volatility goes up, that's essentially just, some of you may not be too familiar with the options lingo, but look, if the VIX goes up, that's telling you that puts are probably gaining in value, which means that dealers need to sell more stock in order to hedge these flows, right? So that pushes the stock market down, that pushes down the S&P 500. So again, VIX up, market goes down. Most of you are probably familiar with that idea. Well, we know why the VIX is going up, because people are worried about the war in the weekend. So then on Monday, everybody kind of pukes out those puts, right? Okay, the war didn't hit in a way that really socks the stock market. Now we're in kind of a 24-hour cycle, meaning that futures now trade all day long, overnight, right now, Monday through Friday. So if something breaks out at 2 in the morning, I can hedge if I have to, right? Whereas obviously on the weekend you can't. Okay, Brent, kind of get to the point. So this morning we talked about why the market sort of rallied yesterday, and it's weird that the market would rally a whole lot and it would have a sustained rally because we got the FOMC tomorrow, right? So who's really sticking their neck out here to spark an extended rally on the Tuesday before a very contentious FOMC? We say it's contentious because, as we described in our notes, there's this elevated implied volatility bid, right? People are worried about the FOMC tomorrow. It's a major kind of event. And so this pink line here shows what we call term structure. The higher that this term structure is, as you can see, this pink line is elevated over that of the gray line. The higher that pink line goes, the more nervous people are, right? This generally syncs with like a VIX of 20 or 25, which we all know implies that there's a lot of anxiety. The gray line shows you what implied volatility looked like back in the September FOMC. So you can see the relative concern or worry about what Powell's going to say, the impact of that is much higher now than it was, in September, right? So this is a contentious period. So getting back to this morning's note, and I'm gonna get to why this matters for you all as futures traders, and then I think when you kind of are able to take this options context and then apply some of the things that Scott talks about, looking at order flow, looking how stops are moving, those kinds of things, it can really help you, put all the pieces together. So here in the founder's note again, we said, look, rates are coming down, which is another, we all know now, the market is basically just a derivative of interest rates, and we're all very sensitive to that. If the 10-year breaks over 5%, look out for stocks, right? I think we're all aware of that kind of chatter and commentary. So rates are coming down a little bit, right? The pressure's easing, and then we had the VIX come off of that Friday high. Those two things will help to buoy the stock market and lift stocks up. So yesterday, when you're looking at this, and I know many of your ES traders, the way that I work is the reason I talk in terms of SPX is because open interest in the options market is based in SPX prices. And so we do the conversions for you, but just know that I'm talking about SPX here. So when we look at our layout here, we have two key events coming up. We have, excuse me again, the FOMC, obviously, which is the big trigger, and then we have NOVOPEX, and I can get into NOVOPEX. But let's just talk about what happened yesterday and today. And what I said in the morning note, I put in a little word of caution here, right? That prices are likely to remain jumpy and fleeting, particularly VIX up about 20, 30 bits, or excuse me, futures are up about 30 bits this morning. So what happens here is we're rallying up into, as you can see on Monday here, right? Let me shrink my window down, sorry. We rally higher, right? And then we seem to kind of give that back very quickly, okay? And so what happens here is that because implied volatility is so high, meaning the VIX is so high, prices are, and liquidity I think is lower than average, right? So what happens is you get these outsized moves and you say, well, look, yesterday we rallied really sharply, but these moves are fleeting, right? They go as fast as they come. And further, because we have FOMC tomorrow, traders and implied volatility can't fully shift and release or just breathe a sigh of relief or freak out until we hear what Powell has to say. So any moves that are taking place are sort of just responses to very quick shifts in liquidity, and we can see all this laid out in the options market. And so when we look at the key zones here, we've been talking about two major levels. The first one is 41.65. And then the second one to the downside that we've been heavily watching in the last couple of days here is this 41.50 area. And these are two fairly large gamma strikes. So there's a lot of options hedging flows that are revolving in the very short term around these two levels. And so this is what's going to set up into today and then tomorrow. And then when Powell speaks, if you look at our notes, and I can show you the notes, where we break out and have a much longer term, several day rallies if we close over 4,200. I'll explain why that is. And then the bearish implication is 4,100. If we break below 4,100, we're likely to test 4,000, and I'll talk about that scenario as well. So I think what sets up here is, we have the options markets giving us very clean targets, right? And I think that there's actually more fuel to the upside than many people appreciate. And it doesn't mean we have to go to the upside. It just means if you tell me, hey, Brent, we close above 4,200, I think we can rally much harder than people expect. And now, why is that? And again, I wanted to start on the more macro sense, and then we can dig into HIRO, I think, a little bit more. So I just want to sort of set the stage and the environment a little bit, Scott. And if I'm straying off course, please yell at me.
No,
all right, so I'm sorry, go ahead.
No, this is good. You're kind of just, expanding on your comments that you write every day. So this is good.
Awesome, thank you. And I know people want to get into brass tacks on HIRO and some of the things they can look at for helping their day trading. But I thought, like, let's start with the higher the more macro kind of commentary, because I think you really need to understand the context of the environment you're in, right? Is the market waiting on something? Can we break out? Can we shift directionally? Can we move a lot? This is a mean reverting market, I think, right now. Like, we may jump 20, 25 handles, but we can puke that right back because there's nothing to trigger that longer term move. Okay, so why do I care about 4,000? This chart here shows you put gamma and call gamma by strike. And I don't want anyone to get overwhelmed with the options terms on here. For the purpose of our conversation, the bigger these bars are, the more this is a support and or resistance area. 4,000 is a humongous level, okay? And so if we push down into this area, it should be an area where options hedging flows increase, which I think helps to support the market if we test this level. It's a massive level. It's been a massive level for a long time. It's also a fancy round number, which people are just drawn to, right? So I think it takes Powell being like maliciously, hawkish to have us break that level over the next, 5 to 10 days, basically. The second reason I see it as support is this model here. This is our gamma model. And I don't want to dig into exactly what all this means. We can talk about that. And I have a lot of content to support everyone. I just want to show you all that where this model bottoms, historically, that is an area where I think the market finds support. You can see that's right around this 4,000 area again. This bottoming is an area where, again, hedging flows should start to support the market, in my view. The third one that helps us to kind of see this is, we call this our tilt metric. What this measures is total put gamma relative to total call gamma. Again, that's a mouthful to try to understand. But if you look at, do I have a pen tool? Oh, I do. Cool. If you look at where, I think the pen tool just broke my screen here, but if you look at, if we go to 4,000, we're about to be right in this area. Change my color pen. I can. All right, here we go. There we go. So if we go to 4,000 S&P, this blue line's likely to go down here, right? Somewhere in this area. If you look at this metric, you can see there's kind of a defined low, right? It's a very, very, very poorly drawn red line, but y'all can see this, right? I know you all know how to read charts, our experts probably on that here. So there's this low, and you can correspond the low of this tilt metric with lows in the market, right? It's not always the low, like, hey, we're putting in the ultimate low here on the weekend. It's a space where the options market is so full up on put positions that basically I think put prices get so expensive, people don't want to buy them anymore, right? It's kind of like if you're going to buy a house. Well, we all want to live in Miami Beach, right? But the housing prices are so expensive, no one's buying houses anymore. What happens then? Well, the prices come down. And so, and people start to sell their houses because, oh, wow, I can sell my house for, I don't want to move today, but if you're going to pay me $5 million for my house that's only worth $500,000, the house is yours, right? Great. That alleviates the pressure. Same thing, houses or basically anything else. Extreme prices bring in the sellers, and that alleviates the pressure. So this is the situation that we're kind of coming up against at the 4,000 area, I would say again. So that's a very quick and dirty, overview of the macro kind of situation that we're in. Now to the upside, the targets that I have are this 4,200 to 4,300 area. 4,200 obviously right there, but this 4,300 area I think is like kind of my given. If we close above 4,200, I think we're going to 4,300. Why is that? This is the idea of Vanna. So if Powell is dovish or just neutral, the VIX comes careening down, right? It sort of collapses, and that fuels the market. This is what we call the Vanna trade. You may have all heard of this before. This pink line measures the impact of Vanna, and again, I can talk for an hour just on this one chart. But what is key here is, where does this start to flatten out? And what you can see here is that this troughs in the 42, call it 70 kind of area, 4260 to 4270 area. So if all we did was take the VIX and smush it, the stock market, I think, automatically goes up to, call it 4275, roughly into this neighborhood. And then when you add in some of the other factors, I see the big gamma bars at 4,300 to the upside. We would see a lot of put closing, those kinds of things. I think that would really fuel the market. Further, if you look at how big the expiration is, particularly in small caps, it's really pretty interesting. The size of the bars here, again, tell you how big options expirations are. So 11/17 expiration, which is the November expiration, very, very big for small caps. Many of you are probably aware that the small cap index is at, lows going back to, I believe, 2020. That's what we talked about in our note this morning. So this is at an extreme level. A lot of those charts I talked before, the gamma charts, big bar, gamma bars, etc., at 4,000, the S&P. A lot of that lines up for the IWM, but at 160. And I tend to watch IWM because it has a larger options complex. The positions are bigger, more consistent, etc. So if you're watching Russell, they're 2% down, roughly the 160 area in IWM is where I would see support for small caps, kind of how I see 4,000 in the S&P. So we're playing into this November expiration where there's a whole bunch of put positions. And so what I think happens is we get a directional move that extends from FOMC up to November 17th expiration. And this is going to be the trend that I see set up. Either we kind of have this bullish trend where we're volatile and we move down 2% and kind of fight around those bottom levels, right? Or we extend and can rally, I think, into the 11/17 expiration. So that's the macro setup. I know this is a very quick overview where we have a limited amount of time here. So these are the types of things that we lay out in our founders notes on a daily basis. You can go back and look at all our founders notes. We have Q&As, et cetera. And I'll leave it there with the macro side of things. I'm happy to take a couple questions as well. But what I want to do now is jump into HIRO, because Scott has, just an amazing sense as a trader. And we talked a lot with him recently about HIRO and how we think it displays activity in the options market and how that impacts equities. And what he's done is he's watched HIRO and he said, wow, when I combine HIRO with my process, he has a very specific process. If you're on this call, I know a lot of you understand that and look at that. So, look, if you have your own process for trading futures and you overlay this options data, I think it shines a light on some things that maybe you didn't see or you weren't privy to before, let's say. So let's break down what we see today in the S&P 500. The purple line here is options hedging flow in real time. So what do I mean by that? Every single trade that takes place in the S&P 500, so that's the spiders, SPX, SPY, ESF. We look at how much hedging flow is associated with that, with all those individual trades, and we sum that as a rolling indicator in purple. So when you see the purple line go up, that tells us that people are buying calls and selling puts, and the impact of the options market should be to push equities higher. That's bullish options flows coming in, is what you really need to know when the purple line goes up. Conversely, when the purple line goes down, that's bearish options flow in the market. That's a signal that the market should be kind of under pressure. So the way that we look at this is that when we're looking at our major support and resistance lines, these are the ones that we're talking about this morning, you want to see the options flow shift to confirm support or resistance. So in this case, what you saw is the market opened and it came straight down, right? And then we kind of leveled and we made another leg down. But look what happens with the options flow when we make this second leg down, kind of in this 4150 area, right? The options market, the purple line stops going lower, okay? You can see it bounces here and then it starts to come back up. What that tells me is that the options market's not betting or not influencing the equity market to go any lower, okay? So what that tells me is if I'm looking at 4150 support, this purple line staying flat and actually starting to increase is a signal that the market is likely due for a bounce, right? And conversely, what we're seeing here with the S&P threatening to break out to recent highs, we're now seeing the options market as a leading indicator in this case pull back a little bit, suggesting that some of these flows are likely to come down. And so what you start to be able to do is look at how the options market is a signal for what could happen, or it indicates a mean reversion point in options flows as a, whether you want to just take it as a sentiment indicator or actually kind of buy into this concept, which we believe that these big options flows lead to dealers needing to buy or sell stock, and that moves the market. So on the right y-axis, just to be clear here, this over here is dollars of hedging flow that needs to take place. Okay, so if you look at the change between here and here, you take the difference between these levels, that's about $500–600 million over about 10 minutes, right? That suggests that dealers have to sell somewhere around $500 million of options flows over this course of time. Anything over $200 million, $250 million in about 10–15 minutes is something that we consider to be, important. So this is a great way, in my view, when you have your own methods, right? You overlay this stuff as this extra layer of confirmation to support your view. I think it's going to bounce here. Great. What's the options market telling me? I think it's going to, continue to rally. Great. What's the options market telling me? If the options flows continue to just go like this, the purple line just extends. Well, that's a signal that the stocks should continue to run. You probably see very big movement like this tomorrow after Powell speaks. And then what we can do is you get more advanced with this is you can break it down even further, right? You can come in here and say, look, are people buying puts or calls, right? What does it look like? Well, here so far today, the orange line is just call flow, okay? What's happening with calls versus puts? Well, it looks like what happened here is at 4150, people started to buy some calls, and then this blue line goes up, which tells us that they're selling puts. Selling puts is something that's common in zero DTE strategies if you don't think the market's going to move very much. And buying calls is an expression that you're looking for a bounce. So you can see there's a kind of a correlated bounce there with the market peaking, and now we're trying to digest these highs. I think these were the highs that we saw yesterday, and so the options market's not really quite buying into this kind of next leg up, I would say, right? If we pull this back a little bit, we're in this peak where we were yesterday. Now the options market's kind of what I would say is not really buying into it, and I could say that because these lines have flattened out. What about the zero DTE flow? We can add that in here. So we have an extra set of lines. I'll just make this a little bit smaller, but what you see in purple is flow from all options expiring, right? Every single options expiration, whereas the teal line is telling you what the options flow is just from zero DTE trading. And what I note is the spread between these two lines, when they widen out, it gives you some information. It's telling you that the dominant flow is from expirations that are longer than today. Oftentimes you'll see the spread between these two lines be extremely tight, right? Like they're almost totally in sync. And what that means is that it's zero DTE that's driving the market. So today we have a little bit of longer dated options flow. The zero DTE traders aren't really yet buying into these highs. If this teal line will start to rally, that would be an indication that would have a pretty good ramp. And what we generally find with zero DTE flows is that if it's a market that's being driven by zero DTE flows, you kind of generally want to fade those moves more so than if it's a market driven by longer dated flows. And that's because zero DTE flows, they're gone by the end of the day, right? Whereas longer dated options flows, they add to open interest, they add to longer term movements in markets. So, I'll tag Scott back in here for some of the things that he may be looking in real time. If you want to talk about, the move that we're seeing right now, we can kind of break that down. I can get a little bit more into HIRO flow, what it's saying. Just on a quick basis, anytime you're analyzing the options flows, you want to look at not only what's happening, even if you only trade ES futures or Russell futures, you want to be aware of what's happening in the other spaces, right? So here you can see tech flow is pretty flat on the day. And the reason I can tell you it's pretty flat is, number one, we have this thing called flow alerts. You may hear this dinging. Flow alerts will ding in the S&P 500 or any individual stock if we sense large options flow in the name, right? And right now you can see on Qs there's nothing. The other way that you can tell if it's big options flow is you can see this gauge, right? This gauge tells you for every individual stock and ETF, what is high and low of the HIRO signal for the last 30 days, okay? And this little white circle is where we're at today. So the white circle for Qs is smack in the middle. which tells me that today is a pretty light options flow day for the Qs, right? If we're over here, where we'll probably be tomorrow with the Fed, or over here, then we have very bullish order flow to the right, very bearish order flow to the left. You know, you could put the flow into kind of context for how meaningful that is. The other indicator which we just added, which is I think extremely important for particularly for NASDAQ and ES traders, is we added this Mag 7 indicator. The Mag 7 indicator measures the options flow only in the Magnificent 7. As many of you know, the Mag 7s are 20-25% of the value of the NASDAQ and somewhere in that neighborhood for the S&P. These stocks mean so much to the market. So there's been a tremendous amount of bullish order flow today into these stocks. Not only that, remember before I was talking about how when the green line and the purple line are tight, right? That tells us that what's driving the names is short dated options flow. In this case, it's flow that expires on Friday. So this is not people saying, look, I'm buying the dip in Apple, Amazon, Google, Meta, etc. for like December options, betting that this is the low. This is people who are just taking looks like, honestly, to me, that it's covering flow is what I would guess. People don't want to be short in front of the Fed. They're just trying to clean up their positions after the Mag 7 has been very weak over the last several days. Tesla, for example, is just getting crushed the last couple of days. So, the Mag 7, the top names are catching some bullish flow, but this, when I look at this, is just short dated options flow, telling me that people are making adjustments for probably the FOMC tomorrow, and this is not a sign of, hey, longer dip buying. So if you're watching, the E-minis and you're kind of unable to put together, well, where's this bullish kind of like thrust coming from? Well, you flip on the Mag 7 and you're, oh, well, look, not only is it, I lose my cursor here. Not only is it large options order flow, you can see it's fairly bullish in the context of the last 30 days, right? We're pushing towards the right. So, what is this order flow? Let's just break this down real quick and see if we got calls or puts or exactly what it is. In this case, you see now 4 lines, because what I did is I added puts and calls both for all expirations and also just next expiration, okay? So green is next expiration calls, light blue is next expiration puts. So what is happening today? Very clear, short dated put covering. And I say put covering because people were probably long puts. Maybe they weren't long puts heading into this. Maybe they're just shorting puts. Whatever it is, people are selling puts on Mag 7, that's what's driving things higher. When you look at short put flow, it's like short covering in stocks. It pushes stocks up rather violently, but once that short put flow expires or is done, stocks tend to mean revert. And short put flow is different from long call flow to drive a market higher, because when the market rallies, put values go to 0, right? Whereas call values increase as the stock market rallies. So the fact that it's not the orange and green lines leading is a signal that this is likely just some short-term noise, right, and not some kind of sign of a bigger breakout yet to happen, which syncs with the more macro conversation we just had is hey, look, FOMC's tomorrow, that's where a bigger breakout's likely to happen. So, if you're sitting here kind of scratching your head a little bit today on some of the market strength, you can hopefully this flow helps to put some of this into context. So, I think I've said a lot. I don't know if I lost everybody, if everyone kind of fell asleep still with me here, Scott. But I'd like to kind of tag you back in, and we can talk about what you're seeing on your screens right now, and I can give some views on how the options flow is syncing with what you're looking at.
Yeah, so that was great, and I just learned
Soybeans
something. Hold on a second. So I can't.
151 contracts.
It's gonna be pretty annoying during the webinar. I can't really mute all these other products. I'm watching 17 different futures products, so apologies if it's talking over.
No problem at all.
But that right there alone, where you spread it out instead of just looking at the total line, seeing that what's driving this market is the covering of their puts. That's interesting, right? So it's like we'll get into this. What I'm using these volume events, which is in my opinion of watching being a future trader for 25 years, is the strongest thing I've ever seen as far as futures trading in these stop iceberg events. We've talked about that. So for instance, if this market moves higher,
share your screen there again.
Let me grab the screen here. Market moves higher, then you're already knowing, hey, these are just puts coming into the market, and if you see a stop run, you know, that's not usually initiative buying. It's usually guys puking. That could be a great place to put on a short. So, yeah.
Yeah, and I think, you know, knowing that gives me more confidence to fade at resistance, right? And so whatever your, you know, resistance line may be, based on whatever your, you know, underlying kind of strategy is, whether you're, you know, swing trader, whether you watch stop iceberg, whatever it is, I think knowing that was short covering flow, providing the bulk of the fuel, at least in these Mag 7 names, which are the leaders, like that to me gives me a lot more confidence. Whereas again, if I saw call buying, I'd be like, you know, maybe I only want to bet, you know, 1 lot now instead of a 10 lot or something, you know what I mean?
Right. No, that's huge. That's huge information. So, you know, I want to get into all this too, because there's, you know.
Yeah, and you can see in your green chart there on the right, I didn't mean to interrupt. This is, you're looking at 0 DT flow, but you can see that is really fading the rally at the moment, that green line going down.
Well, I'm on the colorblind version. So that's
That's right. I'm sorry, you're colorblind. That's right, everybody. The purple line is what I was showing on Scott. You see the teal line. But there you go. You can see that the options market's fading current price levels is what that you can clearly see that happening right now, right?
Right. So let's just take this off for a second so people aren't confused. So this is where I think so traders need to understand that, you know, obviously this is very important flow, right? Like, hold on, let me get my jar going. You know, this information is very, very important because these options dealers are a big force in the ES, right? So it's important to know what they're doing because they are a big part of the market, right? You have my HIRO chart, right? Obviously, because you saw.
Yeah.
So where people are, I know that, you know, so for instance, I was going back and forth with a guy on Twitter the other day, and he's like, oh, that's just noise, so on and so forth. Well, it's like anything in these markets where, you know, it's important at certain times, and sometimes it's not. Like, it's important to know, hey, on the rallies, is it just the put covering, but things like that. But the point is, it's like just looking at every blip in this thing would be like looking at every bubble on you know, the buy or sell bubbles, right? It's activity from these options dealers. There's times to pay attention and to really be alert. Like, I would think this would be a time to start really paying attention. But this is where I think traders get confused. So just, and again, you know, I'm not brand new to this, but I don't claim to be an expert at all. I want to become an expert. That's why, you know, we're getting together, and I want to teach traders the right way to use this stuff with what I use, because I don't think there's a better edge in the history of futures trading if you can combine the two. But where I think traders are being confused, like for instance, so we opened up, the market moved up higher here, and this was this iceberg event. There was buy ice, right? So that failed right away. And I literally got on, it was right before you got on, and I, according to my rules, so I didn't just short this because HIRO was going the other way at the time. I was using that as like, hey, that's great, because I want, you know, based on my rules, I got short down here at 84, right? So this is where I think traders are getting frustrated using this as like a red light, green light type of indicator, because if people were like, say they were just using the stop iceberg indicator, not with my rules, but they said, hey, here's an iceberg. Oh, it's not holding. So this is a buy iceberg, meaning some entity came in here and bought heavily. They're hidden orders until they're triggered, right? So, you know, they could be saying, okay, that's starting to move away. Hey, great, HIRO is moving down, I'm going short. And then all of a sudden, out of nowhere, HIRO rips up, and then they're potentially stopped out of the trade, right? And then all of a sudden, now HIRO is still going this way, and this is kind of just sitting here. So this is where I know, you know, just from me watching it, but I know traders, just by listening to them in my room and so on and so forth, are getting frustrated at certain times where, like, okay, this thing keeps going down and this is just kind of spinning around. So that's where, you know, I want to try to clarify, quantify what's important move, what's not, so on and so forth. So another example, so I have some examples that I'll show, but this would be like, let me see if I can find this. I think it was yesterday's trade. Hold on 1 second. I just want to, because there is something similar happening. Of course, I'm going to struggle finding it here. Let's see. Oh, you know what it was? It was here. So yeah, so this is kind of similar. So this was Friday's trade. So HIRO just to make sure I remember what's going on here. HIRO is moving up. Right, so HIRO is moving up and the market moved with it. Then HIRO dropped and then ES basically based, right? So it was dropping, it dropped a little bit at the end, but and then it turned around and then HIRO went the other way. So I'm pretty sure the answer is, there's certain patterns with the HIRO, just like there's patterns in the market, right? So what happens when this thing goes down and ES just spins around? Is that a sign that the minute this thing turns up, you should be buying with both hands? So that's one scenario. So the point is, like, I want to help futures traders clarify, what's a lot, what's a little, when you should be paying attention, when you shouldn't be paying attention. Obviously, you don't know, at length of what I'm doing with these stops and iceberg events with my rules and so on and so forth. But just in a general sense, like just black and white, this looks like this market should be dying. And I guarantee you there's traders going short that are looking at the HIRO right now saying, well, what the hell? This thing's selling off. Why is ES just sitting here? So, like, what would be your explanation, like, right now, of why the market potentially, not that you're going to know, but what would be your guess of why this thing just turned down heavily and the market's just sitting here?
Yeah, so if we break down the options order flow a little bit, bring up puts and calls and let's see what's happening there. So in orange is the calls there, so you can see, or in yellow, people sold calls there, and it looks like they're adding some puts. Now bring up the Mag 7 if you don't mind. Yeah, and that is also topping out here. So I don't have, when I look at this, you say to yourself, the options market is fading this move. Okay, now the options market is not obviously the only source of flows in markets. So two scenarios here.
I don't mean, that's the thing, right? That's where people are putting so much weight into this thing, and then they get turned off by it because it doesn't conform a lot of times. That's what traders need to understand. This is just one component of the market, but at times it's very, very important. So that's what we're trying to figure out. So sorry, go ahead.
Yeah, no problem at all. So number one, when you see those indicators, like in Mag 7 here, the lines have flattened out, right? So what that tells me is that, whatever the predominant flow that was taking place is just paused or stopped, right? And Mag 7 is only one part of this. So, is there another source of flow that is overtly bullish? In this case, would it be rates, or would it be something else that is absorbing what we believe to be selling flows, as we saw in the S&P 500 indicator, that you were just looking at? And
Right.
So, look, if you line up the resistance that we see there on your screen, the fact that this is a double top from yesterday, not only a Mag 7 stop buying, right? Essentially buying the market, but we see that fade in the S&P 500. The ducks all line up, right, in a row to say, look, this move should be faded. And if there's another source of flow that's buying the market or supporting the market, do I have an idea of what that flow is and how long that flow will persist for? Because just because we see the options market fading it, well, if that flow is being absorbed, as you mentioned, is it, look, rates have gone down now to 4%, and that's what we're fighting here. Is there, some other indication of, of external buyers in this case? On a day like today, I don't know, maybe there's a little bit of rate pressure or something like that. But look, the options market fading this at resistance, I feel very comfortable sitting here, even though prices haven't yet given it up, right?
Right. So this is exactly where my stuff comes into play, right? So not my stuff, Bookmap stuff that I've learned to utilize. So knowing this information, knowing that it was going this way, knowing that the calls are, basically fading and the put covering is fading. Now what we do is, so there's a couple things I see here. First of all, this is heavy liquidity, right? So these are the big players playing their games, and they could, whatever it is, the point is this is like a magnet. It's not, so if you're a newbie trader, you come in and you look at this like, oh, look at all this. This is obviously just showing the order book in a different way, a heat map. They're like, oh, look at all this these sell orders up here. I want to go short. It's actually the exact opposite, right? It's like a magnet. Once this stuff gets filled, that could be the key for the move down. The next thing, the most important thing that I look at is a volume event, right? A volume event. So if we know this information, now we're sitting here, like you said, it hasn't happened yet, but it looks like it's going to. Well, if this makes one more spike up, fills this liquidity, or even if this liquidity wasn't here, but if we get like what would be perfect would be a stop run, right? If we get a stop run, we know that most of the time that's just retail traders puking. Well, now, and then if that stop run fails and we have rules for how far before we, get in a short to signify that's failing. Point is, this information, then you see information based on the SI indicator. You're fully confident that, okay, that stop run didn't hold. That's we call it a dumb and dumber, the dumb money puke. That moved below. I know this information. I'm trading triple size here. I know this. You don't know anything, but there's a very, very good indication that this market's going to sell off, right? So it's about using this information with an event. So I would which I am, I'm already short from this event based on, it wasn't, I was getting confirmation with HIRO. I'm still not stopped out of that short, by the way. But the point is, even if I get stopped out and we get another event and it turns bearish, I'm probably going to trade double size just based on what we just talked about here. So it's about understanding this is not the end all be all. This is not red light, green light. It's understanding the flows and the patterns with this, and then incorporating the real-time events and the rules around your real-time events to give you the ultimate edge, as far as I'm concerned.
Yeah. So, what in your view, Scott, is all right? We're looking at resistance here. Market is down, I don't know, 2, 3, 4 handles, maybe something like that. What's kind of the minimum amount of move where you look at this and say, okay, look, this was helpful. The HIRO indicator is helpful. We moved down 7, 8, 9, 10 handles. Then you say, okay, the effect sort of worked versus it was just sort of noise. Do you understand what my question is?
Yeah. So we have these areas. And so this is actually in this document that I pound into my traders' heads every day. This is directly out of Trading in the Zone. So, when I do enter a trade, these are my personal areas that I get out. So I preach these, but this doesn't mean, traders have to use these exact areas. They can use whatever they think is important, but these are important areas to me. So we haven't really talked about any of this yet. So Ludwig levels, we'll look at that. Market profile, composites, highs, lows, POCs, VWAP, standard deviation. So you get and obviously Spotgamma levels struggle to get through heavy resting liquidity. Like, so an example would be if I was long here, if it couldn't get through this heavy resting liquidity, I get out some. So that is basically, so say I do get short here. So and this is the key, right? So you're in your mind, you're sitting here waiting. You're waiting. Well, I am, because I use my main driver is the SI indicator. So I'm just waiting I'm already short, but say I wasn't short, I'd be waiting for a new setup. And once I did get short, then I'd already have these areas in my mind where I'm potentially getting out as we move lower. And that's what your question was, I believe. So, I don't usually get out of VWAP by itself unless it's confluent with something else. But I would definitely be looking at, you can see here, this is just sitting at the top of this market profile composite. So if this breaks down back in here, I'd be watching point of control. I'd be watching. So these are Ludwig levels. She's actually in the room too. These things are the second most powerful thing we've ever seen in futures trading. So the blue are very good support levels. The red are resistance levels, and there's other way you can read these as far as coming up with a thesis for the day. But if this were to break down, I'd be looking at potentially 78 quarter to get out of some of these. If I do get short, I'm short, but to say I'm getting a new short. Why is that? That's daily value area low. Daily value area is just one standard deviation for VWAP, and it's confluent with a baby lug. So these are areas that I potentially get out. So what I tell traders all the time, you may have your own areas. You may be looking at the 200-day moving average. You may be looking at a Bollinger Band, a fib level. It doesn't matter. Those are areas once you get in the trade, you want to pay yourself as you're correct. And what you can do is obviously watch the order flow as it gets down there with not only the bubbles and the SI events, but that's when you can watch the HIRO too. So if we get down to one of those important levels and all of a sudden I see calls going like that and the puts going like that, well, that says, hey, get out. So on the flip side, it comes say that daily value range that I just showed, we get down there and I see calls are selling, they're selling calls and they're buying puts. Well, I don't necessarily have to get out at that level. So it's all contingent on what I understand with the volume events and with the option. This is another way you can use this, right? So it's just really, really important information. And I just think traders need help in deciphering when the best time to use them. But I think this combined with what I'm doing is really going to help clarify for futures traders, basically be the aha moment of, the best times to be using this stuff, right? So just blindly buying and selling every time this thing spikes, using the real-time volume information from the stop icebergs event and the rules around how we trade them. I think that is the ultimate edge, like I've said.
Yeah, and I think that's another thing to note here. Can you click back on the S&P 500 there? You can just click the little tab button. So, at what point do you say, hey, Brent, the options flow broke down and, we're out on this thing? Well, if that flow bottoms or turns up, then I would say, okay, let's wave the white flag here and say, the pullback, this is all she wrote, right? We've got 3-4 handles, but so far the options.
Let me stop you right there. So what notional value would you say turning up is relevant, right? Just a turn up could be just a blip because this is just options dealers.
100%. So it's about $1 billion notional change is what I deem to be significant. Okay, so that is essentially what if you're seeing. So it's time and size is why I'm pausing, right? So if you see $1 billion over, let's say, half an hour, that's a lot. If you see 500 million over 15 minutes, that's significant. So those are the numbers that really matter. But even if you just take the purple and orange lines there and see those start to flatten out, right? Then you say, okay, the options market now, it's sold the high, but it's that flow starting to back off a little bit. Am I not so comfortable holding my short anymore? That could be a confirmation that, okay, look, maybe we want to back off some. But if the lines continue to go down, then that's implying that the pressure is still there, kind of to your point earlier, right? So, right. Look, I being short in this particular moment with the options flow going down, we know we're coming off that double top before or whatever, the trade in my view is quote unquote still on until maybe the options market start to rally. In other words, my purple and yellow lines there start to go up, at which case you go, okay, look, now the options flow is flipping, which takes that selling pressure off, in other words.
Right. So, I mean, a good place if this does start to roll down would be obviously where it came close to this morning and bounce. If you see this thing move down here, outside of for me, outside of a SI event that happens, say you see this stuff starting to turn up at this level, well, that's a great place to be getting out, right? You already know this is a level. And
I would anticipate that at that option support level, you would see the HIRO flow turn up on the screen to confirm that, okay, this is the bottom. And that's a good 15, handle move down there. That is quite a move. So, when I look at this, I'm always curious, look, the futures were at, I don't know, 41.95-ish, 94. So we're down about 10 handles in the futures market. And so, when you look at what the HIRO flow did here, you look what the options flow did, you see this pullback. I think that this was a successful signal for traders thus far, right? And when do you stop out? When do you take your gains on that? I always have this tough balance because some guys will be like, oh, it's great, I just bagged 10 handles, I'm super happy about this. And then someone else may be holding for a 25 handle move and say, well, it didn't work for me, right? So
right, exactly.
I think I'll harken back to some of your rules before. In how you're reading markets, how much are you trying to achieve on a specific trade and the like.
Right. Yeah, I mean, for me, there's no way I'd be, if I got a new signal, like I said, I'm already short, but there's no way I'd be just taking that. But I see your point to the, how much do you want when you take a trade? So say you're watching the HIRO flow and you're like, you know what, I'm going to get short. They filled a little bit of this liquidity. I'm going to jump in a short right here. These are not my strategies. I'm just making examples. Right?
Yeah.
So I'm just going to jump in a short right here. Yeah, you're right. You made almost a 10-point move there, right? So it's all about understanding this. So let me just get into a couple of questions just that I have, right? That we've gone over, but I know other traders have. So what is the best time period to be watching this? You told me daily. Is that correct?
I keep it on one day, and then I drag that x-axis over on I drive the time over.
This way or this way?
So if you just go, yeah, like that. That's how I zoom in on the S&P 500. And I think you can actually. I don't know if that feature's there. I'm just checking something on my local. We have a beta system that I spend a lot of time in, so sometimes I have beta features, which I don't think are actually there yet. Yeah, so if you go, if you hit the 3 bars again there, Scott, no, to the right, yeah, that, and then unclick include extended hours at the very bottom, yeah. That gives you, after the market opens, I'll just watch that and then I'll zoom in. So that just basically got rid of time before 9:30.
Yeah, that's I didn't even notice that, and that's important. I don't want to see extended hours, so that's.
Yeah, it's useful if there's a 8:30 in the morning, there's CPI comes out or something like that. Really helpful to watch because you can gain some sentiment. But to what we were just talking about, you can see that HIRO flow now bounced, that the market's kind of bouncing up, right? So
Right, so this is, for example, it's like, just because it bounced, does that mean you just turn around and go long everything? No, I mean, this is just basically in the middle of a range, right? So this is where traders, they have to lower, I don't want to say lower their expectations because this stuff is incredible, but they need to understand, like, how this fits in with the general market, right? And again, it's not, you don't just jump in on a buy because you see a blue buy bubble. Well, you don't just jump in just because you see the thing turn up. Yeah, it's important if it turns up a certain notional value at an important area, things like that. But that's where traders need to, like, think a little bit instead of just saying, oh, this thing doesn't work. Oh yeah, I get whipsawed all the time. It's just noise, like the Twitter guy I was arguing with, right? So it's just ignorance is what it is. And I'm ignorant with it too. But I know the power of it. Just common sense, how powerful it could be, right? So that's what we're trying to get across.
And I've so here we see the bounce back up the high, and if the options market turns south at this level again, then I think it's sort of very clear what the options market's reading as the high on the day, right? Which I would think that our lines would turn back down, the purple and yellow.
So see, that's a perfect example. That is a specific pattern that traders can look for, right? Okay, it's not just watching back and forth. It's the context of things. Okay, market came up here, options market turned down. This is like, we have trading setups in my room, right? So we have distinct trading setups. I'll just give you a quick view so you can laugh at some of these names. They're pretty funny, but these are the actual position trading setups that I take in my room, right? So slug, lick, izzy, bark, dada, I lug you, right? So they're funny, but they're supposed to be fun. The acronyms are funny to be memorable. The point is, this could be a specific trading strategy where you, like you said, you see the market at highs, the options market sold off. The market comes back to highs again, and this is another question I'm going to ask you too. I'm glad this is happening. But the market comes back again, and it turns around again. That could be a distinct setup that you just look for that exact setup.
Yeah, I mean, it's fading hard now to your sort of point there. So
the other thing I'm going to ask you too that I'm seeing a lot. So let me just to make it a little more clear, just get this total right. So is there a relationship? Well, there has to be. Now, this is kind of a dumb question, but it's good to go over. Is there a relationship between the market's up here, HIRO's up here. HIRO comes down, market comes back near highs, HIRO's still at the same notional level. Is that kind of a signal too, where the HIRO didn't come all the way back here this time? It stayed down here.
I mean, people want to see the convergence divergence thing, and they want to see those two lines often resolve, right? And the fact is that the two lines are independent of each other. So particularly as you go longer over the day, that divergence is less likely to kind of meet up again, if that makes sense. So this is why what I'll typically do is I'll drag my chart, particularly in the afternoon, I'll drag my x-axis. So I'm really only looking at like the last hour or something like that.
Right, so you're not using a divergence from
there's nothing
versus now.
Right, the S&P shouldn't go to 4157 just to meet with the green line again, right? That the two are again independent of each other. But this is very bearish order flow coming into the market, which suggests that the equity should be pressed down. So what we've talked about doing is maybe changing the way we plot instead of a line, so that because it's natural to see this convergence and divergence and wanting to see that happen. And I think
you said the word exactly. Traders want to see that divergence, even though it's potentially not real. Right, as far as
exactly, and I can be victim of that as well. But the fact is, like, bearish flows coming in doesn't mean the S&P should have to go to 4160 right now to hit that for the lines to match back. Excuse me, the lines to match back up.
That's important too. I guarantee traders are using it in that fashion and getting frustrated as well. So that's why the stuff gets cleared up. I think traders are an incredible tool.
Could be, and I think we've been discussing is plotting as maybe volume bars or some other methods that, you know, would maybe make people less likely to see that as you know, the divergence. They're less likely to view it as a strict divergence indicator. So
I didn't hear that last thing you said, sorry.
I was saying that, you know, we're playing with different ways to plot it to change or make people sort of less susceptible to bias of the convergence divergence thing.
Right. Okay. All right, a couple questions. Well, one question so far in the room was earlier on. For day trading, which is better to gauge, VX or VIX as far as the like for thicker
I tend to watch VIX myself, just the VIX index, because the VIX index ties directly to, you know, what's happening with S&P 500 options. So that's what I personally tend to watch. But I don't think there's a right or wrong answer to that, to be honest.
Okay. Eddie said a simple question about Spotgamma features beyond ES and Q. Could it be helpful for other markets?
So I have not yet looked at, you know, oil, gas, et cetera, commodities. I don't know much about those markets. I've never traded them myself. So I'm hesitant to add our data and features in because I can't speak with as much knowledge as I can about, you know, the equity markets. So we do have it on our drawing board for not only commodities and the like, but crypto, et cetera. But they, you know, those are maybe next year kind of projects.
Yeah, I would love to see that. I mean, you could just use a caveat in there saying, hey, listen, here's a HIRO for this, but I don't, you know, it takes me 4 hours a day to come up with these notes and all the different scenarios just for ES. I can't do, and that's kind of where I'm overloaded too. I'm watching 17 different futures markets and it burns me so many times with mistakes, so on and so forth. But I mean, point is you can maybe get a HIRO for those products and just say, listen, you're on your own as far as what, you know, what's really happening for the bigger picture, but here's the flow. I'd love to see the flow for like crude and all these products actually.
Yeah, you know, I mean, you raise a lot of good points there. And some products, you know, the options market's pretty large, like crude oil. But some, you know, in some cases, like I don't know how big like the, you know, Ethereum options market is. I think it's getting mature, but and I think it's decent, but you know, maybe corn or something doesn't have a good options market. I don't know.
Right. You know, maybe I know it's easier said than done, but maybe, you know, have the HIRO for those and let people make their own decisions. Hey, this is helpful. This is not helpful, and then they can maybe tell you, you know, this works great in this market. This doesn't work great in this market. Instead of you having to watch it yourself, type of thing too.
Yeah, not a bad point.
I'd love to see that. See any other questions? So you know, I don't want this webinar to be, because we're going to do another one in probably a month for a bigger audience. You know, I do have screenshots, but it's not me. You know, I show this for my room all the when I see this stuff, but it's not for. I don't want to be saying, hey, this is where you know, you should be getting short, you should be getting long, even though these examples that did happen. But I can quickly show them just we can go over it quickly if I can find the damn thing. I don't know what I did with it. I had it. Hold on. There it is. So let me get rid of this. So by the way, I don't even know if you know what this is. This is just tick strike. So this is basically showing the flow on these. It's an algorithm that's showing the speed of the orders coming in as well as the size, and it's a meter between 1 and 15, so you can kind of see nothing's happening now. I wish that they would reset these so you don't get confused, but when you see this lighten up, then it just gives you indication. So this is really helpful too. And then Bookmap actually just came out with their own version of this. It's called, and this is another thing you can do. We talk about this all the time in my room too. You know, where you're seeing this. So I had this set in an hour. So this is showing me this green little tip. This was over 70% of the highs, the biggest buying or selling in the last hour. So that's really important too, right? We already have our iceberg events, but this is telling me this is a little more fleeting and shorter term stuff. But you can see there was heavy buying up here. You can see somebody was sweeping the order book. Well, once again, you can use that with this info where you're like, oh, great. Too bad for these buyers because they were really aggressive. Now they're in big trouble, right? Based on this going down. So it's using this real-time order flow with the real-time order flow of the HIRO type of thing.
Yeah. It's also, it's interesting to note too, the time frames. I mean, many of you know that there's 11 o'clock, 11:30 area, Europe is closing, right? And we see a change in options flows and just the way the market trades around when Europe closes as well. So, those highs kind of coincide with Europe closing and some positions getting shifted and adjusted and those kinds of things. So I think it's always an interesting time frame. And then of course today now we have the auction, I think at 1 o'clock, which is always now it's like its own trigger point. So be aware of some of these events.
Right. Yeah, I mean, actually, there is a guy in the room that always harps on the European close, and that's exactly what this is right around here. So that.
Yeah, I see it. I mean, I see it constantly. It's really, and you've seen a lot too, where the market will be very bearish or very bullish into the European close, and then it will just trade flat the rest of the day. So it's like we drop like a rock, or we rip super strong, and then the momentum just totally dies after that European close. It's pretty interesting.
Right. And then another question. And the put and call wall zones for specific price levels, I'm assuming he's talking like these here, your levels here, are put and call wall zones specific, I'm sorry, are put and call wall zones or specific price levels, and how do they relate to HIRO?
Yeah, there's specific price levels. Now, what'll happen is sometimes we'll have clustering of levels, and then I'll refer to it to sort of as like a zone, because look, if I have a level at 41.60 and a level at 41.50, especially if the market's very volatile, I'll more refer to it as a zone, right? Because you could maybe overshoot a little bit. As traders, we understand that. So, but they're tied to a specific, I would say, level. And so what I look for is when we hit the level, we hit the strike, does the options flow mean revert? So like if we sold off to 41.50 because there was negative HIRO signal, right? Does that signal then stop and turn up on the HIRO chart when we hit 41.50? That helps me to confirm that it's going to act as a support level. So I'll watch that, and then I also watch the VIX. I want to see the VIX kind of reverse as well. So if the VIX spikes as we drop to 41.50, then I want to see the VIX start to sell off. I want to see the HIRO flow turn up, meaning the purple, all those lines on our HIRO chart go up. That tells me that people are selling their puts now. They're monetizing their puts, and this should relieve pressure on the market.
Got it. So in this situation, like real time, would you be saying to yourself, if I know you trade, you're sitting here and this thing has kept turning down, and once again, this just keeps spinning. Would you say if this these turn up, a decent notion,
you have
it's like go time to the upside?
That's $1 billion of options order flow, which for me is material, right? That's a lot, and the market is digesting that, and
it's absorbing it, obviously, right?
Absorbing it, right? It's handled it pretty well, right? So I don't love being short now, because look, we pulled back, we got that 41.85 area, but now I see the flow is flattening out. You can see it very clearly in the teal and green lines on the HIRO chart. That the option sellers have now, currently a little bit tired out. So if that starts to turn back up, meaning if we move towards zero on the HIRO chart, then you have to be kind of concerned about the options, flow now backing a rally, right? Or putting buying pressure on the market. So right now those lines are just flat. So it's not like a, hey, run for cover kind of thing, but that's what you have to start to worry about, right? Is that, look, the options, the stock market absorbed this negative delta options flow, this negative options flow. And so, do we worry about the fact that that absorption leads to a market rally? And look, if those two lines turn up, then I think that tilts the favor to at least testing that liquidity there at 41.95.
Right, and this is what separates traders, right? Most traders, retail traders, why most traders fail. They just want black and white. Tell me what to do. When I see the signal, I want to sell. When I see the signal, I want to buy. The great traders use a little critical thinking, right? So it's not, turns down, I'll just jump in a short, even though this did break 10 points from the high there. The point is, now if you use your brain and a little critical thinking, you can say, hey, you know what? This thing, from what I understand, yeah, it looked like it was a great short. It went down a little bit, but why is this just spinning in place? Critical thinking. Well, if this turns up, this is probably going to rip off the page type of thought. So that's where traders, I just know how they're misusing your information. like, oh, it's noise. It's not noise. It's very important, but you have to critically think sometimes. Sometimes it's black and white, right? Like, all my examples that I had in here, and we don't really have time to get into them, and that's fine. Someone saved for the other webinar, the big webinar, because I talk to Mike Room about them all the time anyway. Though there's a lot of times it is black and white, but there's other times that it's just like, okay, you just use your brain. There's something that's happening here where this thing will not sell off, and it's absorbing these options dealers' activity. So guess what? The market starts to turn up, or this starts to turn up, it's probably going to fly off the page, right? Doesn't mean it's going to. This could keep and see how these are turning down. Market's starting to agree a little more. So guys, just, this is my trade room. So
Not only that, you can see there that liquidity now looks like it's down at, that was at 41.85, seems now it's down at 41 kind of 80-ish, which is kind of interesting there.
Right here, yeah. So yeah, my trade room, they're pretty, there's some very good traders in there, and they understand what we're doing. And I'm just talking about the general public. I'm just so sick of people saying on Twitter and stuff, oh, it's noise, blah, blah, blah. It sucks for them, is basically what I would say. It's too bad for them, right? It's like, great for us, too bad for them if they can't understand the power of using this, and in my opinion, what I use. So,
and some of it too, is working on better ways to put stuff in context, and the usability of, basically kind of giving people the Rosetta Stone to understand it a little bit better, and deciphering things a little better. And so I just bring that up because we hear all the feedback. We have a huge development list, of little hints that, pros like yourself have given us, on down to, our guys that sort of trade on their lunch break, to improve the product. So, we want feedback. We actually love when people do troll us on Twitter, so we can figure out what's going on. And then, look, I also like to stomp on those people when I can.
Well, no, I even told my room, I'm like, guys, because some people, there was one trader in there that took the class and was all for HIRO, and then was not getting the results they thought, and kind of went away from it. And I said, Brent's got some thick skin. I've heard him on webinars. He actually welcomes it because he wants to know how traders are thinking, where they're struggling. It's not, hey, this is all the information you need to, this is the end all be all. Like that's really important, that you take criticism really well, because you want to make the product better, and you want traders to understand how to use it.
Yeah, and I to that point, we've for people in your group, we've extended the free trial because, we want everyone to get a full. It's a lot to digest, right? What are options deltas? There's all this kind of like, Greek talk that can confuse people, and I think obscure some of what's happening in it, and it takes a while to figure out, how this can help you. And so, we're here to improve traders' profits, right? That's what our goal is. We want people to use this thing, to love it, to feel like it's, uncovered this thing that they hadn't seen before. And so, look, that's the goal. It's not to sort of, there's nothing else in it, right? And so if we're not successful in portraying how the options market is impacting the equity market, then that's on us to improve it, right?
Right.
And so, that's the quest. I don't think it's a quest that, it's not like you get to the end of the road and we're done on this. I think there's always going to be improvements and shifts and changes and adjustments. Markets are constantly changing. And so, we want to know how to make things better, and it's a continuous process. So I think there's a lot of value in it now. I trade, I know I hear from guys like yourself, the pros that use this and trade and are successful. So I have no doubt that there's edge offered by it. If we can do some better things to reveal that edge or make it a little easier for people who are, newly initiated to get it, then I love to do that. But, it's a process that, we're happy to undergo and help people out. So not only are on-screen feedback helpful, we have two webinars a week, Monday and Tuesdays at 1 p.m. where we handle any question that you got. We take people who literally asked what's a put and call before on up. And then we also have a Discord chat, and we're looking to do obviously a lot more with you, Scott, in terms of training, just sort of, giving a professional futures trader's eye on what to see in HIRO. So we're not resting on our laurels here, I guess is what I'm trying to say.
Yeah, again, I see the power in it, or I would not be using it and or doing webinars with you. So,
yeah.
So I guess the coupon code, if you guys, want I think it's 2 weeks for free.
Yep.
So you just go to subscribe now, and I believe where would they put in the, so the
Yeah, so when
Google,
you hit the 7-day monthly trial or 7-day alpha trial, what I tell people is take the alpha trial because you get HIRO, you get everything free for
so
2 weeks.
you get all this stuff, right? Set them
You
in.
get everything.
all the
And then
stuff you
if
were
you're like,
showing.
look, I just love the founders notes because the founders, I mean, we get, you know, that's what I write every day. And that's the part that's most valuable. Then just downgrade. It's very easy to downgrade or switch to the standard. So take the full enchilada for free for 2 weeks. And then there's a coupon code. See the have a coupon.
So put in, so mine's just Scott, very technical.
That's
it.
right. Simple. Yeah. So, you know, look, tomorrow is going to be really awesome to watch the options flow because you can figure out how are people reacting to the Fed, right? Are they selling puts? Are they buying calls? What's happening? So if there's a day that is going to like, the action's going to be there, right? It's going to be tomorrow. And, you know, I don't think you would want to trade off if you're not comfortable to see tomorrow unless, you know, something glaringly obvious, but you can watch it and see how the flows react and get a great feeling for, you know, the information that is delivered in, not just in the HIRO stuff, but our founders notes and everything else. And it's if you don't like it, it's real easy to cancel, but you get the free 2-week trial. I think, you know, we want you to be believers before you put your hard-earned money into something. And yeah, so that's the bottom line.
Well, if I say it works, then they should believe it. So I'm just kidding.
I only became a believer after you said it.
And I guess I think it's all caps, Scott. If you guys try all caps, where you get 2 weeks, get in there and try it out. I mean, again,
Yeah,
I would.
thank you. And so this is what, you know, this is the tack that we've taken recently is that, you know, and I don't mean to speak poorly on the average trader. I mean, I'm a retail trader like everybody else, right? But, you know, we're going to pros now and saying, look, do you believe in this? And, you know, guys like yourself say yes, and we get great. Let's show how you use it to the world. And you know, I think that speaks highly. So thank you very much, Scott, for taking the time to dig into this. And I appreciate that. If it didn't work for you, you wouldn't return my phone call. So
Right, and the thing is, guys, what you don't well, you may understand because he talks about his history a little bit. Like Brent worked for some large trading firms, you know, and he was coming up with these strategies for these firms, right? So, and actually, a fun fact is Brent and I worked at the same trading firm. I don't know if it was the same time period. When did you work at Wolverine Trading?
I was there 2015. So 2007 to 2013, I think it was something like that.
Yes, so we were there at the same time. I was there 2010 to 2011. That's pretty funny. I was in the back corner by the cafeteria. You're talking Chicago,
Okay.
right?
No, I was in New York myself. That's why.
Okay. Well, yeah, that's why I didn't see it.
Yeah.
But yeah, I was in the Chicago office. So the point is, this isn't just like some, you know, trader like, hey, look what I figured out. Like this guy was, you know, he was a major player for like Wolverine is a major firm, right? So he branched off on his own with this information. But I'm just, you know, like I said, this is extremely powerful information from somebody who knows what he's talking about.
Well, thanks. That's very, very flattering. I appreciate it. And you know, look, we're here to offer more support. Scott, I know we're going to be doing a bunch more webinars like this. I think it's helpful for people to see. I love it when we can see it kind of like something come together on screen, like the flow came down today and the market so far been under pressure. So so I like that there was a great kind of real-time example of hopefully how this helps.
Yeah, it was great. Really good. A lot of questions answered for me anyway.
And I would love to see the market drop, you know, 75 handles there, and then I could really kind of like spike the ball and but look,
Right.
you know, look, the market came under pressure off those highs. We're still getting the negative delta order flow. So, you know, knock on wood, going our way so far. So good to see.
Yeah, I'm still short. We didn't get any events while we were on the webinar, but my room knows there's plenty of events. There's one right around the corner, but I'm still short off of this first event. I never got stopped out, so now I'll be watching. Hopefully, this thing can keep moving lower and get down to this 4150 SPX and see what happens.
Yeah, and that HIRO flow is just not backing off. I mean, just continues to build that pressure up. So we'll see.
Yeah. All right. Well, great webinar. A lot of question is here. Oh no, the last question is HIRO still available on Bookmap? No, right? It was just too much.
That's correct. Yeah, we kept kind of advancing the algorithm, and it ran into some technical difficulties with Bookmap. So
Yeah.
our hope is, as we've built out we're building out an API, and our hope is that we can kind of plug back in. I mean, I love the Bookmap platform. I think they're great partners of ours. You know, unfortunately, we just kind of got a little bit, we built too much kind of internal stuff to keep porting the signal out in the method that we were using before. So I hope that we're back on there at some point in the future.
Awesome. All right, Brent. Well, thanks. I look forward to our next webinar for your audience. And this was great. I got a lot of questions answered, and I think people getting some confidence and understanding that, you know, the context of this stuff and how powerful it could be.
Yeah, it was awesome. Thank everyone for your time, and look forward to seeing you soon.
Well, thanks, Brent. Talk to you soon.
Okay.
Thanks.